Welcome back, everyone. Today, we're diving into the story of Bigbear.Ai, a company that has seen one of the wildest stock market roller coasters in recent years. If you've followed its journey, you'll know this stock went from sky-high promises to near disaster, and then clawed its way back to a surprising recovery. But the big question is, can it actually sustain that comeback, or is it still standing on shaky ground? Let's break it all down. So first, let's rewind. Bigbear.Ai, ticker symbol BBAI on the New York Stock Exchange, went public at the end of 2021 through a SPAC merger. It started trading around $9.84, and within a few months, investors pushed it as high as $12.69 in April 2022. Everything looked golden until reality set in. By the end of that same year, the stock had collapsed all the way down to just 63 cents, an all-time low that left many early investors deeply underwater. Why did that happen? Well, before going public, management had painted a very ambitious picture. They projected revenue would soar from $182 million in 2021 to $550 million by 2024. Those numbers looked amazing on paper, but the reality was a lot less glamorous. Instead of explosive growth, revenue barely moved, creeping up from $146 million in 2021 to about $158 million by 2024. That's not even close to what they promised. The struggles didn't come out of thin air either. One of its biggest customers, Virgin Orbit, went bankrupt. Competition in the AI space heated up, and on top of that, broader challenges in the enterprise software industry dragged on the company. To make matters worse, CEO Reggie Brothers, who had been leading the charge since 2020, stepped down in late 2022, right when investor confidence was already shaken. But here's where things get interesting. Despite all that turmoil, Bigbear.AI's stock is no longer sitting at rock bottom. In fact, it's trading around $5 today. And just to give you perspective, if someone had bought $1,000 worth of shares at the absolute low, that investment would now be worth around $8,000. So, how did this company manage to stage such a sharp rebound? Let's talk about what changed. Bigbear.AI develops three key AI modules: Observe, Orient, and Dominate. Together, these tools help organizations pull in massive amounts of data, identify patterns, and predict future outcomes. The interesting part is that these modules can plug directly into edge networks, which means the data gets processed closer to the end users instead of only relying on central servers. On top of that, Bigbear.AI also collaborates with larger AI firms, including Palantir Technologies. The recovery really started gaining traction under Mandy Long, who stepped in as CEO after Reggie Brothers. One of her boldest moves was acquiring Pangom, a company specializing in AI-powered vision and biometric tools. That acquisition didn't just bring in additional revenue, it also strengthened Bigbear.AI's foothold in the government sector. Pangom's leader, Kevin McAleenan, had strong connections, including his past role as acting Secretary of Homeland Security. Fast forward to early 2025, and McAleenan himself became CEO of Bigbear.AI. Investors loved the move because it signaled that the company might be able to secure more government contracts. And sure enough, new deals followed. Bigbear landed digital ID and biometrics projects for the Department of Homeland Security, a modernization initiative for the U.S. military's Orion Decision Support Platform, and supply chain projects that expanded its portfolio. By the second quarter of 2025, the company's backlog had swelled 43% year-over-year, reaching $380 million. Combine that with wider adoption of Pangom's biometric tools in airports, and suddenly, Bigbear.AI didn't look like a sinking ship anymore. But before we get carried away, let's pause. If things are going so well, why hasn't the stock climbed back to new highs? Well, here's the catch. While the backlog is impressive, those revenues don't show up all at once, they trickle in slowly over the years. And many of the government contracts Bigbear.AI has won are fixed-price contracts. That means if costs unexpectedly rise, the company can't just renegotiate for more money. In fact, the second quarter of 2025 brought some disappointing news. Management cut its full-year guidance, shifting from expected growth to a projected decline. Instead of revenue growing between 1% and 14%, the new outlook called for an 11% to 21% drop. Analysts now expect revenue to shrink about 16% for the year. The culprit? Disruptions in key government programs, particularly those linked to the U.S. Army, as federal agencies try to consolidate and streamline their data infrastructure. Margins have also been under pressure. In the first half of 2025, gross margin slipped more than a percentage point to just 23.1%, and adjusted EBITDA margins went from a negative 7.3% to a much deeper negative 23%. Rising research and development costs, reliance on lower-margin customized modules, and weaker revenue growth all combined to squeeze profitability. Analysts don't expect those losses to go away anytime soon. And here's another concern: dilution. Since going public, the number of outstanding shares has exploded by more than 170%. A big chunk of that came from issuing shares to acquire Panjam, plus additional stock offerings and high compensation expenses paid in shares. For current investors, that means each individual share represents a smaller piece of the pie. Despite its struggles, the market is still valuing Bigbear.ai at a pretty steep price. With an enterprise value of about $2 billion, it trades at around 15 times expected sales for this year. That's an expensive multiple, especially for a company that's still losing money. And if that wasn't enough of a warning sign, insiders have been selling stock at a much higher rate than they've been buying about 53 times more sales than purchases over the past year. So where does this leave us? On one hand, Bigbear.ai has regained some momentum with its government partnerships, biometric technology, and stronger industry connections. On the other hand, it's still battling declining revenue, shrinking margins, and heavy dilution. Put simply, the story isn't fully turned around yet. For investors, the takeaway is this: while Bigbear.ai has avoided collapse and staged a solid rebound, it hasn't proven it can deliver sustainable, long-term growth. Until the company stabilizes its business model and improves its financial health, the stock may not revisit its old highs anytime soon. In fact, the most realistic outcome over the next year is that the stock trades sideways, or possibly slides again, while the company tries to figure out its path forward. This is not financial advice.